All right, what is up, you guys? Today we're gonna be going over PO3, the power of three, right? So it doesn't matter if you've just heard about the PO3 or you've already kind of got an idea about the PO3. I'll be going from every level of education, from beginner to advanced. That's what I always do. So to start off, PO3 stands for the power of three, right? And what it's talking about is actually the three elements, which is the accumulation, the manipulation, and the distribution of price, AMD for short. Okay, so that's the power of three, and we'll get into what it is. Now, to put it very simply, it's just as the name suggests, right? As all the elements suggest. When price accumulates, that's the first element or the first starting point, the first starting point for the power of three. Then you have the manipulation of price, where it manipulates into something that you want to look out for, which we'll be learning how to look out for it. For example, perhaps an imbalance, perhaps liquidity, and distribution can be the finishing move of this AMD of the power three, where it maybe reverses into another major pool of liquidity, or maybe it distributes the same way that it manipulated. It's called a continuation. So, without further ado, let's just go into the charts and take a look at some examples. Let's find some. And let's see. I'll teach you how to really look. Holy fuck, that's my door. My bad. I'll teach you how to look for AMD, how to look for the PO3s according to time and according to sessions as well. But first, let's just get into an example. Yeah. Okay, I see one right here. All right, cool. So I'm seeing that price is accumulating around this sort of area. Uh, okay, let's just take this then. So from this to this, all the way here. All right. We can go a further step. Let me go to the 5 minute real quick. Let's see. Yeah, I mean, I guess we could extend this all the way, but for the sake of explanation, I won't. Back to the 1 minute. Oh my fucking god! All right. So price was accumulating here. What does that mean? All right. To put it in simple English, price failed. Price failed to break below this low right here and close below it, and fail to break above this major high. Like, these are major swing highs and swing lows, right? And if you don't know what swing highs and swing lows are, I'll teach that in another video maybe. What I'm trying to say is that price failed to break above these major point swing highs, and it's not showing a clear direction in price. As you can see, it's going up, down, it's accumulating, correct? Now, what happens when market opens? This is 9:30 a.m. New York time. It goes upwards, but what does it do? Does it close above? Let me just take this out. Does it close above this high right here? No, it doesn't. Does it close above this high right here? It doesn't do any of that. Instead, it comes all the way down, takes out all this major liquidity, even closes below it, takes out all of the liquidity all over here, right? And it even fills out. I'm pretty sure it fills out a fair value gap. I'm pretty sure this is like a 5 minute fair value gap. It filled it up perfectly. And is that anything else? Yeah, there are more things to it, but I'm not going to explain that here. It manipulated downwards. It filled something out. It took a bunch of liquidity, as I said, right? There are three steps. Manipulation is something, and now it's going to distribute. Now, in some cases, it can distribute just, it can continue. Let me get my arrow tool out. Where's the arrow tool? Yeah, this works. So in this case, it can come up like this and come down. It can continue downwards. It can very much do that, right? Distribution is not sort of limited to only reversals, but in this case, it's a reversal. Let's read it, right? Price manipulated into something. It did a few things, which I'm not gonna get too much into. I'm just gonna work on the structure of this, and it distributed upwards. I want you to understand, if it's doing a reversal distribution, which was not confirmed. This wasn't confirmed because this can very much be a retracement into a premium. Like, if we draw our fib tool right here, this right here is above the EQ, above the zero point 0.5, right? Which means it's in a premium. There's a discount and a premium. If we're going for shorts, I would look for shorts over here. But obviously, that was not the case. In hindsight, it went all the way up. So when there's a distribution, you have to keep in mind, usually it goes and takes out the other end of the manipulation or accumulation. So in this case right here, right? So that's what it does. That's the whole point of the distribution. Sometimes manipulation can take out both sides of the accumulation. In this case, look, bang, bang, right? So how do we expect, or what trade would we take, and how would we expect to go in a certain direction? Because if I'm being honest, I'd be expecting to go shorts over here. Why? Because guess what? When 930 opened, it looks like it just took it manipulated into the accumulation highs. It manipulated into all these highs, and then it distributed downwards. So I'd be thinking it was shorts. I'd admit that, but I wouldn't wait for anything until it's very solid. So in this case, if you guys know about inverse fair value gaps, I think it's pretty simple. If you don't, I'll explain it all in another video. But right here, this is a fair value gap. Okay, pretty simple. And right here, as you can see, on this blue candle right here, we open and we close right above it, and we inverse that fair value gap, right? And I suppose you could take like a trade like that from all the way up here, but that's like a terrible risk to reward. So I wouldn't take a trade, even even in this candle where it comes down here. I'd only consider a trade if maybe it touched this inverse fair value gap, because this is the first presented fair value gap, right? I would not take trade over here. I'll admit that. I would want a better risk to reward, like maybe in the EQ of the fair value gap, right? And then I put my stop loss somewhere down here or something. And once again, there's some liquidity down here as well. I would not be confident in this trade, and straight out I just would take it, right? So that's what we're focusing on, just the structure of AMD, the structure of PO3. Now that you understand sort of what AMD looks like, let me give you another example and try to find for one, right? Because you can find this everywhere, but there is a structure, or there is a methodical way to find AMDs. Wait, hold on, my phone's about to die. Charge my phone. Yeah, so there is a methodical way to find AMDs, and I'll teach you how to do that. You don't want to simply go in the chart and be like, oh, this looks like accumulation. You don't want to be like, oh, this looks like accumulation. This looks like manipulation, because that's sort of a handsy-pansy way of doing it. It's very gambly, and I don't mess with that. But just looking at this, we have a sort of accumulation zone right here. Okay. We have this accumulation zone right up till here. Why is this accumulation? Why? Because we had the swing high, we had the swing low, okay, came up, and we did not close above this high right here. As you can see, we closed below it. We did not close below this low right here. We were just accumulating up, down, up, down. Just by looking at it structurally, you're like, okay, this shit is not going anywhere. And then right here, it starts coming down with all these black or these red candles, right? And what happens? It closes below this low, right? Closes below this low, and it manipulates into something. What does it manipulate into? You have to see. It doesn't just matter if it has a breaking structure. It has to manipulate to something, and it has to make sense. It came into this order block. All right. Close below this, disrespected this order block, and we touch this right here. Wait, touch this right here. What did I say earlier on? I would not take a trade. I would not take a trade over here. I'd want it to come down here for a better risk reward. What did it do? Came down right there. That's a trade I took. Came down right there, and I put my stops right below this because I don't expect it to come any lower than that. I put my DP not at the highs over here, but at the highs over here, right? Why? Because I don't know. I just didn't feel like it was gonna hold for very long. And then I held it for a while, and then I got a call from my friend telling, "Are you ready for news?" And then I saw a fair value get right over here, and I did not take that trade because no, you don't hold through news, but it makes sense. Notice how this predicted news, right? So it manipulated into this. Okay, this is the A, and then this was like the M. I suppose this was like the M move, like all the way down here. And what happened? Straight up fat ass distribution on the outside. Distributed all the way, took out all this liquidity. And remember how I said it takes out the other side of the accumulation or the manipulation? Look, took out the other side of it. Bang. So that can be your target. That can be your first target at least, right? Then from then on, I don't trade because it was like just look at that price action. It's just horrendous. So I just hopped off the charts. But yeah, that is essentially what AMD is, or what the PO3 is, right? So those are some examples. Now I'll teach you how to look. I'll teach you how to look for one. Hold on, let me just make sure I'm recording. I swear to God. All right, cool. Um, I want you to get this indicator right here, which is sessions. This is sessions. It should look like this, and let me just run you through it, right, real quick. The yellow section would be the Asia section, which is really, really racist, by the way. The default is kind of crazy. But the blue section is London, which just makes sense. The pink section is New York AM, right here. So 9 till 1. Yeah, 9 till 1. Then the red is PM session, which is 1 to 4:30. Or 1 to, yeah, 1 to 4:30. So let's just, you want to focus on 4 segments at a time. Obviously, it starts with Asia, ends with the red zone, which is PM, right? Like that. Cool. I'm gonna go in the 5 minutes. It's a bit easier to read, I suppose. And let's go find some examples. Okay, let's just start here. All right, because it's not too trendy, anyways. Asia, Asia comes down, all right, but it does not continue downwards. It comes up and takes out some internal liquidity within Asia in itself. Do not go out and take all this out here, right? So Asia did not manipulate or anything. It seems like Asia is accumulating, but I'm not going to assume anything just yet, right? Now, what does London do? London takes out Asia high, takes out Asia high. Obviously, it's not clean way; it just takes it out immediately and goes down. But it takes out Asia high. Does it shoot downwards and go for Asia low? Did it do that? No, it didn't do that. It didn't do anything. It was just accumulating. So I look at London, right? I assumed that Asia was accumulating because it's AMD, right? But London also accumulated, right? So Asia was not the accumulation. I just went off that assumption. So now I can tell that Asia was not accumulation, and I'll get to what Asia is. It starts with London. London was the accumulation, and what did New York do? New York AM, this entire pink session, it manipulated downwards so hard and took out a bunch of stuff. Probably, I'm not going to scroll that far back, but you can assume that it manipulated and took a bunch of things, and then finally distribution headed upwards. And and obviously there will be a setup, but I'm not going to go into that yet because I'm on the 5 minute. But you get the idea of it. It distributed upwards. That's what you want. That's sort of what you want to catch. You don't want to really catch the manipulation. Cool. So what is Asia? If Asia was not AMD, like it was not accumulation because this is AMD, then what the hell was Asia? Good question. Asia is X. AMD. Hold on. What the hell is my food? I'm so hungry. Dog. 7 minutes away. Holy shit! My delivery guy looks like a pedophile. Anyways. So, what is X? All right, X can fill out any function of this. Right? What the hell does that mean? So, remember how I told you delivery can have either a reversal like this, right? This is a reversal, or it can have a what's it called? Continuation, where it just sort of where's that tool, bruh? It just sort of just keeps going down, right? Holy fuck. Oh my god, excuse me for that. I sneezed so hard that I stopped recording. That is so embarrassing. But anyways, as I was saying, delivery can have 2 functions. One, it can have a reversal, which means straight up it reverses, right? If it's going down like this, it's going to reverse upwards. Duh. Or a continuation, which if it's going down, then it's just going to go down more. Maybe it'll retrace upwards and then go down. In this scenario, looking at hindsight, it does look like reversal, obviously, because we eventually took the accumulation highs right here, but ain't nobody trying to hold for that long, right? We can just catch a move somewhere like over here. This is like 100 points already. I don't know how much you're trying to catch at this point. 300 points will be a swing trade, but it does work. It did come and take out this accumulation, even if it took 2 days. It did come and take it out. So what is X, right? X can either be a reversal or a distribution towards a continuation. So it can either be a reversal or a continuation, We just have to look at the prior price action. Okay, cool, coming down, coming down, coming down. This kept going down. It didn't go take all of this out, didn't take any of this out. So we can just assume this is distribution, but a continuation of distribution. XAMD. The same way, assuming this X over here, right, was not like this, was not a distribution, it was accumulation. It was what London did. And London would obviously manipulation. London would obviously be manipulation, and New York AM would be distribution. So New York PM, we can automatically assume is going to be an X, whether it be a reversal of the distribution or whether it be a continuation, right? We can that's how we can assume it. So now we can already predict just by looking at the sessions. Now we can always look at a single time frame every single day, or rather a time span every single day, and we can expect what to see and what we can sort of expect from the way it's moving. So now you don't have to simply go and look at this and be like, is this accumulation? Is this manipulation? Is this blah, blah, blah? You can just use the time, use the sessions indicator, okay? Or if you just know the time, it's good for you. Just use that and try to sort of read. Because not only would you just look at it and assume it's accumulation, but once it starts manipulating, you'll sort of start looking at what it's manipulating into. So you're training your eyes to look out for something, to look at what price is going to sort of go towards or react from. I teach this. I'm making a very in-depth trading book and a mentorship. I've not released it or anything, but I'm teaching everything so in-depth in there. And I did mention a little sneak peek from there, right? Doing this, you will learn how to read price and how to know where it's going to react from. It's not going to look very random to you anymore. So first you implement the structure, which is your skeletal system, which is this. And then you'll sort of start adding on, the nervous system, the muscular system. You'll sort of it will be human nature to you. It will be second nature rather. Cool. Now, I did promise that I was going to go from beginner level all the way until the advanced level. So we're going to get super fucking advanced up in this pitch. You don't have to do this yet. Right now, if this is your first time or like sort of rather a novice at this, I would recommend you click off right now, maybe archive this video and go practice this. Go look out for it, both back test and forward test. Look at it when the market opens. The next day, just look out for it. I wouldn't recommend going on to what I'm about to teach because it's pretty advanced, right? Cool. Let's get to it. Let's close sessions because it's so fucking bright. Let's open this indicator right here. 90-minute cycles, right? Cool. Now, I don't think these 90-minute cycles are right because, let's see. Yeah. It's UTC minus 4. There you go. That's better. Cool. So, notice, rather than notice, I don't know why I'm saying that, but remember how I said there are 4 cycles within a day, AMDX or XAMD, whatever, right? That's a PO3. Now, what if I told you that within sessions, that this concept is rather fractal, which means it's like it can keep going down and down and down and down. It's like a forever loop. You can keep going with it. It's so repetitive and it's so mathematical that once you see it, once you understand it, you can never unsee it. None of these candles over here, none of the structure was random. The markets was predetermined to come down here to this exact spot, come up here to this exact spot, way before you even saw it print on the chart. Let me tell you that, right? And this is sort of how you start to learn how to read that. So let me just open this bright ass indicator again, and let's just mark out Asia. Okay, this is the beginning of. I can't mark it out exactly, but it's fine. You get the point. We'll mark this out right here. This is Asia, and let's close this right here. Cool. Now, notice how that within Asia we have all these little boxes. What does it say? Asia Q1, Q2, Q3, Q4, and then London Q1, Q2, Q3, Q4. So technically, London doesn't start at 12. It starts at like 2, I'm pretty sure. But I'm pretty sure this indicator is just a bit iffy, right? Let's just take this instead. I think this would be better. Yeah, right here. And then right here. Cool. So Asia Q1, Q2, Q3, Q4. AMDX or XAMD. So within Asia in itself, you have your AMDX, XAMD, right? Isn't that crazy? So right here, we can already determine that there's no way this is A, right? Why is it not A? Because it's too trendy, right? It took out this side of liquidity, and it also took out this liquidity down here. So it's definitely an X. So we can sort of ignore that, and we can also sort of ignore the next one because we know that the next coming up will be an accumulation. If the prior cycle is an X, you can tell that the next will be an A. If the prior cycle was an A, you can tell the next cycle will be M, manipulation. So obviously this accumulated, didn't do jack shit. And what happened? Started to trend a bit. Bang, manipulation, right? And what did distribution do? Did distribution reverse? No, this is a continuation distribution. D distributed downwards even further. So XAMD. Isn't that cool? So it can go. This is called the 90-minute cycle. I'm pretty sure this is called the day, like the day theory, DAYE theory. I'm not sure if that's the exact one, but you don't need to go too deep into that. I promise you, you're gonna want to hang yourself if you do that. I just need to understand this much. All right, you don't want to get too mathematical. Like out if you're watching this video. So like, what's the point of picking up another textbook filled with math equations? Anyways, let's do the London cycle. Cool. Q1, Q2, Q3, Q4. This is very obviously accumulation to me. Up, down, and it didn't do much, right? It really did not do much. This is manipulation. Very obvious. Why? It manipulated up, took this quarter one, okay, came down, and went even further up again. It's like it came down to take something over here. I mean, right now we can assume it came down to take this little internal liquidity, but it went upwards. Cool. It didn't take this high right here, but that's completely fine. As long as it took this high right here, it came down, went up again. So now we know the distribution can either be a reversal or a continuation. How am I going to judge if it's going to be a continuation or a reversal? Because we know this is D. We know it's either going to go up or down from here, right? It's not going to mess around too much. Well, I can see that there is a fair value gap here, and I can see that this hasn't been touched yet. This fair value gap has not been tapped yet. So very likely that we might reverse, even if it's just to come down here, touch this, and go back up. So I can do one of two things. One, I can trade downwards into this, or I can wait for it to come here, tap this, and then I can trade away from it. Or if it inverses this, I can, take another trade, whatever. So obviously, let me just get rid of this. Too much noise over here. Don't want too much of that. It distributed. It didn't come touch this. It went upwards. And what happened? It did a reversal. So we know that this is a reversal distribution. Inverse fair value gap. We inverse this. Cool. Came back. We touched into this fair value gap. We didn't touch the inverse. I'll admit that. But we touched into the fair value gap. We reacted from it. And probably like over here is where I take the safest trade possible. I'd say probably, yeah, over here. And this closing of this candle, oh my goodness. I would not take a trade because this is, once again, it's London, not an A plus setup. But I put it above this high right here, okay? And I put my take profit right around here, right here, at the starting of the fair value gap. Back came, it went a little bit lower than that, fine, but we do have a positive risk to reward. It's nothing crazy. It's not like a 4 RR trader or like a 20 RR trade or whatever you see on TikTok, but it gets the job done. It will get you money. Also, where the hell is my food? Arriving at 4:30. All right, cool. And then you have your X, which is a reverse distribution, which went upwards. And you can also take a trade over here because this is X, right? This was D. D was a reversal. And I guess X would be another reversal. And you can identify that there was a, what is this? AR. Bang. Right here. And if you noticed, I don't know if you noticed this, okay? Quick sneak peek. I just noticed this as well. Accumulation, manipulation, and manipulation into the fair value gap, and a distribution upwards. So obviously that's all hindsight. We had an inverse fair value gap here. We had sort of a, what's it called? A break of structure right here, and I would not mind entering up here and perhaps putting my stop loss somewhere at the bottom over here. I don't want to put it too low, maybe right below the order block, this order block, and I'd aim for Q3 high, which is the distribution high. 1 to 1.3 RR. No, 1.3 RR. Okay, that's not bad. So, yeah, that's 2.6 RR you would have made with those two trades while only risking 2 RR. Pretty cool. I mean, on a 100K account, you would have made $1,000 right there. And that's only in a couple of minutes, you know. I think these trades lasted for about an hour, I guess, not that short. But yeah, that is the basis of AMDX. That is the basis of PO3. It is very simple. You can keep referring to this video like a textbook. I always advise anyone that learns from me to refer to my text, to refer to my material repetitively until they get it. That's how you just got to do what you got to do. If that's what you got to do it, please. This is for you, not for me. There's no shame in the game. So I hope you guys understood that. If you have any recommendations for any topics of education, any topics of trading you want me to cover, do let me know. If you guys have any questions on the video itself, also do let me know. I'll help you out. Thanks for watching.